I'm here today to talk about the SBA tools and programs, and also to provide a little bit of orientation to economic developers about how you can interact with our office to make a more positive environment for entrepreneurs in the small business community. So just want to start by saying thank you to Matt and his staff and the Heritage Ohio Group for having me on. It's a great opportunity to talk to some, great economic development organizations doing great work all across the state. So I really do appreciate it very much. Just to introduce myself, I am the lead lender relations specialist for the Cleveland District Office. And what that means is I spend a lot of time working with banks and other lending institutions, CDFIs, and so on, that are delivering SBA loan products. So I tend to focus on access to capital, and lending, loans, and servicing, and liquidation, and all that kind of technical stuff for the agency. But I also put on my economic development hat from time to time as well, do outreach to economic development organizations or even directly to entrepreneurs themselves. So with that, I'm going to go ahead and get started, and we'll run through, I think, about 10 slides or so. My agenda today, what I wanted to cover was, what programs does the SBA have to support Main Street small businesses? What tools does the SBA make available to help these small businesses succeed? How does SBA Cleveland and probably SBA Columbus as well work with local economic development officials? And then finally, I wanted to conclude with just a page or so, very briefly talking about SBA's special rules for historic properties, which I know many of the folks in this group would have a part of. So let's take a look. So I guess first thing I wanted to do, though, was to look at a few numbers. And I know numbers are boring, numbers are lame, but it's kind of worth talking about the numbers as far as SBA lending goes, because it helps establish how important these loan programs are in the state of Ohio. I took a look at the most recent completed 3 fiscal years, not including the fiscal year 22, but just 19, 20, and 21. And over the course of that time, which also encompassed the pandemic, of course, we had 204 lenders that did 9,247 loans. And again, that's across the whole state in 3 fiscal years. So figure in the state of Ohio, we're running at roughly, 3,000 or so SBA 7A and 504 loans per year. Obviously in a particular county, it might be more, it might be less, but it's still a pretty robust number. So, as you're in the small business community, you're talking with small businesses and they're saying, banks aren't making any loans. That's, demonstrably not true. Banks, are doing at least 3,000 loans per year in Ohio using the SBA programs. And my guess would be if they're doing 9,000 deals every 3 years with SBA, it's probably, twice that number of conventional loans. So figure, 30,000 loans over 3 years, at least 10,000 loans a year if you're talking about SBA-backed loans and loans from, just conventional sources without the SBA. And we'll talk about what the SBA programs are as well. But you can see in this sub-program table down here, we've got a lot of different flavors of really two loan programs, which is 7A and 504. Another takeaway from this this slide is that Huntington Bank tends to do just about half of SBA lending through their branch network and through their relationship managers. So one way to assure that your businesses are having good luck getting SBA loans, of course, is make sure that there's a Huntington outfit nearby that is supporting SBA loans and make sure people are kind of aware of that. Now, fortunately, in addition to Huntington, there are a variety of other banks that do SBA lending as well. Live Oak is listed here as second, but KeyBank does a tremendous amount of SBA lending. People's Bank, US Bank, Fifth Third, you name it. We're fortunate in the Ohio market to have dozens of SBA lenders that all do dozens of deals. It's just that Huntington does a tremendous number and everybody else does sort of a more rational number of SBA loans, and then they do more on the conventional side. But that just kind of gives you an idea of how active these SBA loans are. A couple hundred lenders, $3 billion. And this isn't even including the PPP and the EIDL stuff that we were doing as well. This is just our legacy loan programs. So quite active. Now we have a third loan program as well, besides 7A and 504, and that's the microloan program. So looking at the exact same period, there was like $9 million of microlending activity in the state over the fiscal years mentioned there. About 1,300 deals. You can see on the map the hot points there are, of course, Cleveland, Columbus, and Cincinnati. But our microlender is doing a pretty good job of covering the entire state. So no matter where you go, there is microlending opportunity as well. They cover the entire state, and that's the organization that runs microlending for the SBA is called ECDI. You may have heard of them, the Economic and Community Development Institute. They're one of the largest, if not the largest, microlender in the country. And don't worry if you don't know what these programs are, because I'm about to give you more than you probably want to know about it. So the flagship program of the SBA is the 7A Loan Guarantee Program. Now, a 7A guarantee is just really a fancy way of saying loan insurance. What happens is a bank or a credit union or sometimes another lender, another type of lender like a CDFI or something, will get a loan application in from a small business, and for whatever reason, they'll determine that there's maybe a little bit more risk there than they want to take. Maybe there's not as much equity injection as the lender would otherwise want, or maybe there's cash flow coverage that's lacking in a particular year, or maybe the personal credit of the owner isn't what they'd like it to be. And in those cases, they can reach out to the SBA for an insurance policy on that small business loan, which we call a guarantee. So the lender receives a guarantee on their loan, up to 90% of that exposure, and the federal government gives them the guarantee and shields them from the loss. The guarantee fee, which you might also think of as the premium to get one of these loans, is zero for the fiscal year, for this fiscal year, for any loans $500,000 and under, which is the vast majority of 504 loans. Now, the guarantee fee is still pretty low, under $1 million, and gets pretty steep after $1 million. But I think, you know, for the majority of Main Street businesses out there, they're probably, in most cases, looking for credit, you know, under $500,000. And in that case, it's good to know that the SBA is giving away this loan insurance for free, which all it can do is just help a lender get to say yes. Because if they're getting a guarantee from the government for 75 or 85 or even 90% of their loan, they're really pretty underexposed on that particular credit, and they should be pretty eager to make that loan. Now, that's not to say that, you know, you get an SBA guarantee and it's an automatic approval. The bank is still going to want adequate assurance that there's ability to repay, and indeed the SBA requires that they do their due diligence and make sure that there's a ability to repay. But the guarantee fee, the guarantee that we're offering with no guarantee fee at all should help a bank get to yes on these deals. Now, the interest rate on a 7A loan, typically around prime plus 2, but I can't tell you exactly what it would be because that's something that a small business and the bank would negotiate between them. Now, SBA will establish certain caps. They're not going to let the lender charge a rate that would be akin to a credit card rate or something. I think the maximum rate we would allow would be maybe prime plus 6 or so for the smallest deals. But generally speaking, you can expect if you're going out for an SBA deal, it's probably going to be Wall Street Journal Prime plus 2%. Now, Wall Street Journal Prime is climbing, as we know. It seems to be climbing by 0.75% almost every month. And that is unfortunate, but by far the vast majority of SBA loans are based off of prime. You can get a fixed rate loan from a bank as well. The SBA doesn't have a problem with that. But most lenders, you know, typically for a commercial loan will be offering something that's adjustable on prime, maybe, you know, adjustable every year or so. And typically there's a spread above that, which might be 2% or so. The terms on SBA loans typically go from 5 years out to 25 years. So it might be a 5-year deal if it was a straight up working capital loan. It might be 25 years if the business was applying for real estate. The loans are always fully amortizing, meaning that when the loan matures, like the last day, the date of maturity on the note, that's when you have your zero balance. Now, that's not always the case on a conventional loan. You know, sometimes a lender, especially on a real estate transaction, might be doing a 25-year amortization with only a 5-year term, meaning at the end of 5 years, the small business has to find a new lender, or maybe they get refinanced by the incumbent lender, but they're kind of at a pretty poor leverage point at that point because they've got all this money and they need to refinance it. SBA, if it's an SBA guaranteed loan, we don't let that happen. We say, you know, this loan has to be fully amortizing so that if you make all your payments, you have a full 25 years to pay off the loan if that's a 25-year loan. We also don't allow the lender to charge any points. So while we'll charge a guarantee fee ourselves on larger loans, we do not allow lenders to charge points on their loans. You might see instead something like a packaging fee, which is allowable, but typically lenders will manage their packaging fees to something that's pretty reasonable in the context of that loan. There's no prepayment penalty on an SBA loan if it's under 15 years. If it's over 15 years, there could be a prepayment penalty on it. And a prepayment penalty just means that if the borrower wants to pay a substantial portion of that SBA loan off early, they would be required to pay a fee to the government for doing that. So loans on the 7A program can be anywhere from $5,000 way out to $5 million. Uses can be very flexible. Any legitimate business purpose, I like to say, you can get an SBA loan for. What you can't get an SBA loan for is for acquisition of real estate that you're not going to occupy yourself. So if you've got somebody in your community who's an investor and a landlord and they're trying to acquire more properties, SBA is not a good fit for them because we want to make loans fundamentally to small businesses. And we'll let the small business create a landlord company. If they want to create an LLC that just owns the property, we'll let them do that. But fundamentally, we just want to make loans to small businesses for small business purposes. Definitely not to a landlord for the purpose of renting out to somebody else. We also can't use an SBA loan for a landlord to borrow to fix up a property. And in many business districts, developers, economic developers are looking for that kind of money because they have rundown storefronts or whatever, and they want to help the landlord get some funding to renovate the building or renovate the property. Not something the SBA will do. What we would do is we would make a loan to the small business to renovate the property. And potentially they could be rewarded for that work by some kind of break on their rent from the landlord. But to be clear, for an SBA loan, it has to be going to a business or perhaps an LLC created by the business just specifically for the purpose of holding real estate. But it really fundamentally should be to the business for some purpose that benefits the business. Now, when people ask me what banks and credit unions they should go to for an SBA 7A loan, I tend to refer them to the activity chart that I showed you a couple slides ago. I can show it to you again. And that's just sort of the number, just refer to them who's doing deals, and then also ask them whether they have a depository relationship right away. Because if someone already has a depository relationship with United Midwest Savings Bank, I don't think it makes sense to go to a different lender for starters. Usually you go to the lender you're working with, and then usually you pick a few more that are active lenders in your area to see if you get some competing bids. And that's the way I would recommend that. Now, if you have a small business client who literally has no idea whatsoever what bank they want to go to, and they have a depository relationship, but they don't know what it is, or excuse me, they don't want to pursue that as far as a lending relationship as well. Maybe the depository relationship is with some out-of-town bank or something like that. We do have a tool, which I'll show you in a little bit, that can help connect them to an SBA lender. The last bullet point on this page is Community Advantage. And that's a special kind of 7A loan offered by a not-for-profit development company, which is kind of an interesting thing because usually 7A loans are offered by banks, Huntington, Key, Fifth Third, US Bank, all of those guys. Community Advantage is where we're offering the same kind of loan insurance, but to a not-for-profit CDFI. And we're trying to get more and more of those. So if you happen to know of a CDFI or some other not-for-profit development company that is interested in getting SBA to guarantee their loans, let me know, because that's the kind of thing that can help us advance this program a little bit better. But some examples of some companies that are offering Community Advantage 7A loans include Growth Capital Corporation in Cleveland, ECDI, the microlender I mentioned earlier in Columbus, Anchor Financial, the certified development company in Perrysburg, Valley Partners, the certified development company in the Youngstown area. Those are some of, but certainly not all of the Community Advantage lenders that we have operating in the state of Ohio. And if someone is uncomfortable with the bank environment, or if they're having trouble getting an approval from the bank environment, but you still think the deal has legs, sometimes a referral to Community Advantage to a not-for-profit development focused firm might be a good way to get them access to capital. So I mentioned 3 loan programs. 7A guarantees was the first of them. The second one is the SBA 504 Certified Development Company Program. Now this is a little different than 7A. In the 7A program, we're just insuring banks' loans. In the 504 program, what we're doing is we're going out as the federal government and we're selling a bond. In other words, we're borrowing money from the public. We're selling a bond and we're using that bond sale to fund hundreds or thousands of 504 loans across the country in any given month. So every month we might be managing a $500 or $600 million bond sale to fund hundreds or thousands of 504 loans across the country in that given month, and then we'll do it again the next month. So these are long-term, low down payment, fixed interest rate loans for significantly sized real estate projects. And these things can go anywhere from maybe a $250,000 project up to maybe a $10 million project. So these are pretty substantial acquisitions, and you'll see these for hotels or for very large properties in main streets. If your project is below $250,000, it probably doesn't make sense to use these structures because there's kind of some moving parts here. Typically, what we do in a 504 deal is what's called a 50-40-10 model, which means 50% bank, 40% 504 loan, 10% equity. The lead lender, whether it's JP Morgan Chase or Fifth Third or a local bank, community bank, would provide 50% of the funding necessary on the first mortgage. The SBA, through our certified development company network, would make that 40% second mortgage loan. And then the borrower themselves would come in with 10% equity injection. Now it could be 15% equity injection or 20% equity injection if it's a startup or a single purpose type of business or property. So the most recent 25-year fixed rate that we had for a 504 loan was about 5%. I think this month's bond sale, it might be a little bit higher, but 5.33 or so. But again, you're talking about a 25-year fixed rate, very competitive with the adjustable Wall Street Journal Prime. So it's a good deal. It's not like an industrial revenue bond. It's not as advantageous as probably some projects that you've seen financed with historic tax credits, but it's a pretty good deal. And it's pretty well accepted in the lending industry. National lenders that have small business lending across multiple states will tend to prefer the federal programs because it's the same across many different states. The state of Ohio has a similar program called 166, which people use. But 504 is a pretty good deal, and it's pretty well accepted, and we think it works pretty well. So certified development companies are the entities that make 504 loans, as opposed to banks, which use the 7A program. But in the 504 program, certified development companies include Growth Capital up in Cleveland, Cascade Capital in Akron, Valley Partners in Youngstown, Northwest Ohio Development Assistance Corporation in Toledo, Anchor Financial in Perrysburg, and there's many in the South as well, like Community Capital Development Corporation, or Ohio Statewide Development Corporation, or Allied Development Corporation in Cincinnati. There are a variety of CDCs across the state that you could use for one of these projects. So these are a pretty good deal. They require some job creation or some other economic development benefit. They tend to have better rates and terms than a 7A deal, but a little bit higher complexity level as well. Now, the last program I want to mention is the SBA's microloan program. I mentioned this 7A loan insurance program. I mentioned the 504 bond sale program. The microloan program is at the other end of the spectrum. So these are projects that are very small, often so small that a bank isn't even interested in financing them. They're usually working capital deals, but they could be, a vehicle or equipment or some build out. Typically between $5,000 and $50,000. The rates are pretty competitive. I think you'll find them to be, 8, 9, 10%, something like that. So, maybe a bank loan would have a better rate, but we are thinking of microlending as being a loan where, the borrower isn't able to access bank financing for some reason or another. Terms typically go up to 5 years. Technical assistance is integrally related to the funding assistance. You can't have one without the other. The SBA funds the loans, and it also funds the technical assistance that the microlender is providing. And again, in the Ohio area, the Economic and Community Development Institute, headquartered in Columbus, is the largest microlender in the district, pretty much the only microlender in the district. And as I said on that I think the third slide in, it looks like they're doing several hundred deals a year, so quite large. quite a lot of capital moving through the microlending program. So it's a great alternative if bank financing appears to be impossible, but the loan still shows ability to repay. And you might see that or sense it when you're talking to some of your entrepreneurs, and they're saying, yeah, I went to a bank for funding and they turned me down, and that's why I'm not able to get inventory done. But you've been by that shop a million times, and there's always people in there buying stuff. Maybe you refer that small business owner to the microloan program because maybe there's something in their credit history that is causing them to get turned down by banks. And maybe what they really need is for an organization like a microlender to come in and really take a look and understand what's happening with their business and why their personal credit is what it is, or what the blemish is that's causing the problem, and maybe be able to overcome that and provide them the capital they need to grow. And then hopefully in 3 or 4 years, they'll be bankable again. But this is a great alternative for someone who's having trouble with their bank. So some tools and resources to talk about. If you're working with small businesses and the issue that people seem to have is just a lack of ability and knowledge and experience, a referral to the SBA's Small Business Development Center network would be potentially in order. So things like business assessments or cash flow analysis, financial projections or strategic planning or counseling, identifying sources of capital, educational opportunities, marketing strategy, all kinds of different things. We rely on the Small Business Development Center counselors to do that. Myself, in my office, we have 8 people right now to cover all of the northern 28 counties of Ohio. And primarily what we do at the SBA is we manage programs. We are in the bureaucracy, and we have extensive knowledge of the SBA's loan programs and our services. But we're not necessarily business owners, and we don't have MBAs. What we do for folks that need that kind of technical assistance, how do I manage my workers' comp, or what permits do I need to open up a tattoo parlor, those sorts of things, we refer those questions to the Small Business Development Center. So as an economic development person, particularly a Main Street person, you want to make sure your small business community is connected with the local Small Business Development Center in your area, so that people know where to go if they have a question and they just need some help, or they want to bounce an idea off of, or a bank is asking for, certain documentation like, Form 4506 in their loan application, and they just don't know what that means. Well, a Small Business Development Center provides that free help and assistance. And they're very accessible people and good friends to the agency. These are funded by the agency and the state of Ohio. So check out clients.ohio.sbdc.ohio.gov for a full list of small business development centers near you. We also tend to rely on the mentorship program called SCORE. So SCORE, for example, in Cleveland is cleveland.score.org. They are the national 2022 national chapter of the year due to their success. SCORE is a volunteer program that provides mentorship to small businesses. So I like to think of them as people that can help you with the real problems that you face when you're running a small business. Things like, how do I hire my first person, or how do I fire my first person? Things that require a little bit of experience. Whereas I think of the SBDC network as being more of your professional consultant types, polished folks with MBAs, experts in the business model canvas, and validating your minimally viable product and all that kind of stuff. Whereas the SCORE, folks will tell you what it's really all about. So I'd use them both, and they're both friendly and both free. Some other tools and resources, and I referenced this a little bit earlier. Suppose you're dealing with a client, they have no idea what lender they want to work with. Now, most of the time, you're dealing with a small business owner, especially if they've got a storefront in your district. They've got some relationship with some lender, or kind of who the lenders are that are around. Almost all of the commercial lenders will do an SBA deal, but if there is ever a need to just say, hey, I want to put my request out there for every lender that the SBA knows of, we do recommend this lender match product on SBA.gov. So it's SBA.gov, funding programs, loans, lender match. And you click on there and you put in your business information and your project, and then that request gets routed out to all these participating lenders. Some are Ohio lenders, some are Pennsylvania lenders, some are Utah lenders. I mean, it's across the entire country. So what'll happen is if these lenders decide that they're interested in the project the small business wants to do, they'll email back and ask for more information. So it's kind of a neat little lending tree situation that we have that's available for any small business that wants to use it. Now, as a economic development person, you could also use the ECDI referral portal. You can click on that and directly refer to our microlender someone that you think needs some assistance. Obviously, get their permission to do that, but it's a very slick little interface. It allows you to put in, 5, 6 data points and get it over to ECDI, and they'll, reach back out and contact your person. So it's kind of a neat way to just very quickly and efficiently get a referral into the local microlending organization. Of course, the SBA.gov website is a great source of information for small businesses. I would just point them to the business guide section. There's an enormous amount of information there that folks can use to help expand their businesses and grow their businesses and create jobs and opportunities for people. So I wanted to talk a little bit about how we can interact as well. When I was talking with Matt about this presentation, what he was most interested in was not just what programs SBA has, which we just ran through in the course of half an hour, but how can Main Street organizations continue sort of a long-term interaction with the agency, with the district offices, so that every time we're talking, it's not the first time, and every time we're talking, we don't need to reintroduce ourselves. So the things I would recommend doing is creating ways that we can provide our information and our outreach to small businesses. So if you've got a merchant association or a chamber of commerce or a library that has a business section, establish some kind of a program of ongoing education for your entrepreneurs. Get them information that's interesting to them, and let us be one of the content providers for that. We're happy to do that virtually or on site. We're happy to help market it and advertise it. We can tailor our message to things that you think your small business community needs to hear. If you're particularly interested, or your small businesses are particularly interested in leasehold build-outs or refinancing, or whatever the case might be, we can provide something that I think will be of value to small businesses. And we'll probably include our small business development centers, a representative from SCORE, so that we have sort of a comprehensive solution for them, and we can provide real value. Now, we'll also do one-on-one meetings with small businesses. If they have a particular issue or they just want to know more, you absolutely feel free to give out my name, my email, or any of the folks in my staff or on my team. We're more than happy to answer questions about the SBA programs. And sometimes that's helpful because sometimes the lenders in a given community might not know a lot about what SBA can do. So this might be sort of helpful to them. Now, another thing that really helps if you've got the power to get it done is an actual incentive program. Here in Cuyahoga County, for example, our district office initiated something called the Municipal Small Business Initiative with Lakewood, Shaker Heights, Cleveland Heights, and some other cities. And what they did is they pooled together some funds, each of the cities, and they matched that with a grant from Cuyahoga County to provide grant funds into SBA projects when there is a gap. And that can be very helpful because you might have a situation where the lender is going to use an SBA loan, but they still want a 25% equity injection. That's one of the things Huntington, for example, typically does. For a startup, they might require a 30% equity injection, even though they're using the SBA's guarantee program. So what this MSBI does is it says, okay, if the borrower can get an SBA loan approval, the city would put in 15% of that project, and the borrower would only have to put in 10%. So now you're talking about a 75% SBA loan, 15% from your city, and 10% equity injection. And that maybe helps that deal move forward. Getting a little bit less debt, a little more equity into these projects is a good thing for everybody because it's less leverage and for the small business to pay, and it's less exposure for the lender to have. And it provides a great incentive for that small business to actually do the project as well. Now, the city that's involved with this and the county that's involved with this actually do okay as well, because what they're doing is they're kind of creating some jobs. They're putting in 15% of a project, maybe that's $15,000, but based on creating 3 or 4 jobs for 3 or 4 years, that's when they'll forgive that money and convert it from a loan into a grant, and they make their money back from the income taxes that are generated based on the small business's success. So there really is something in it for everybody. The point that I make here is that these incentive programs like that provide a great platform for me to interact with the economic development director and the merchant association in the city of Lakewood. It gives us a reason to talk every month and to talk about projects and to move things forward. It's great that the money is there, but the relationship that's created is also a key thing that helps us continue a good relationship going forward. So there's multiple levels of benefits for something like that. You might want to establish an educational series with SCORE or your SBDC at a library. There's a curriculum called MoneyWise, which we could do, or 10 Simple Steps to Start a Business, which we could do. I would probably participate with that, but most of the education comes from the experts at SCORE or the Small Business Development Center. Last thing I'll mention here, every year, I want you to be thinking about who your most successful customers are, who your most successful small businesses are, and nominate somebody for Small Business Person of the Year. It's not hard to do. There's like 3 or 4 forms. It's a compliment to your customer and to your client. It raises your own profile as well. And it's the best part of the job. We're all in this because we love small businesses. So every year, try and think of at least somebody in your community that's worthy of a nomination based on the jobs they've been able to create, their longevity in the community, the way they give back to the community. Just give them that compliment and go ahead and nominate them for Small Business Person of the Year. If they say no, I'd rather not, that's fine. But it's a great conversation for you to have where you're actually trying to give back something. It's good for our communities, it's good for Northern Ohio, it's good for our district office. So go ahead and make that nomination. Those are due in early December if you have anyone in mind that could be a Small Business Person of the Year candidate for our region. All right, last thing I want to mention today, before I'll take some questions if there are any, is how the SBA interacts with historic properties. Because I know with your group, you have an economic development mandate, you have a preservation mandate as well. The SBA, when we're funding projects, we have to obey Section 106 of the National Historic Preservation Act. This is federal funding, microlending, 504, 7A, federal funding. So we have to adhere to this act. And the act requires the agency to consider the adverse impact to properties that are listed on the National Register of Historic Places or have historic significance, such as that they may be eligible to be listed on the National Register, either individually or as part of a historic district. So if you are fortunate to be working in an area that has a historic district, it may require additional due diligence by the lender when they're using an SBA loan program. And what does that mean? Well, for one thing, if you're really interested, you can check out our standard operating procedure 5010-6. Just Google it, trust me, you'll find it. Page 211, it gives lenders exactly what they're supposed to do when they suspect that there might be a historic property involved. But the gist of it is that the agency isn't allowed to support any renovation, restoration, rehabilitation, or demolition to a historic property or a property that could potentially be considered historic property without considering whether or not we are damaging the historic nature of that property. Now, if it's simply a purchase, right? So you're using the SBA money to simply purchase the property. Then the borrower fills out a self-certification form. They say they're planning on doing no renovations, no rehabilitation, and we'll normally sign off on that locally with our district attorney in the state of Ohio. But if alterations are intended in the project, then there has to be what's called a Section 106 review by the State Historic Preservation Office in partnership with the local district of the SBA. And sometimes National Park Service would need to be involved as well, depending on where the property is. That could add 30, 60, 90 days to a project that's happening. So as you start talking to your small businesses, what do they need? How are they going to be successful? If they are in a historic property or if they are in a historic district, you might right away say, okay, it's important that we understand what the rules are going to be and budget enough time. If it's going to be a federally assisted deal, like an SBA deal, that the SBA has adequate time to sign off that the project is 106 compliant. I think you've got a great relationship there already with the Historic Preservation Office, so that would, of course, be very, very helpful as well. And very, very easily could help get a project done if it's something you want to get done for one of your small businesses in your districts. Having someone that's sort of on the side that can help interpret, I think, the SHPO stuff and the SBA stuff and make sure everybody's happy could be really key to getting something accomplished. Okay, feel free to contact me. My name, as I said, is Raymond Graves. I have my phone number mislabeled there. It should be 216-522-4180. Guess I fat fingered that one. Again, the correct phone number is 216-522-4180. But the email address is correct. It's raymond.graves@sba.gov. And with that, if there are questions, I'd be happy to take them.
Thank you, Raymond. Just to apologize to everyone why there was no introduction. We had a small popcorn brush fire break out in the office and threatened to engulf the building here. So we had to let Raymond start without any introductions. So apologize to everyone for that. Beeping has stopped now, so we are good to go. If you have any questions, you can type them into the chat box now. We'll do a couple quick announcements while we wait for some people to type some questions in. First off, we have two great upcoming events. First off, in November 9th, our next webinar is going to be covering the historic VA hospital complex here in Dayton, Ohio. And it's going to be a really great webinar. They're working on planning what to do with some of their historic buildings there. So they'll be talking about kind of the introductory phase of the planning process for that. And secondly, the next day, November 10th, in Lorain, Ohio, we are having a historic tax credit workshop at the Ariel Broadway Hotel. It's from 10 a.m. to 3 p.m. that day. We'll be covering Ohio and federal historic preservation tax credits, as well as new market tax credits, and you'll be able to talk to a small developer as well. The charge on that is $10 a person, and that is sponsored by the Nord Family Foundation and the Community Foundation of Lorain County. All right, I'm seeing some questions come in here. Let me pull up my question panel here. So to start off with, Raymond, what are some normal projects you see people asking for 7A and micro lending loans for?
Sure. So the typical SBA loan is a $100,000 SBA Express line of credit. So a lot of the stuff that we see and approve are going to be folks that are going to their bank and they need a line of credit for inventory purchases or to fund their operating cycle. We see a lot of leasehold improvement deals as well. And the reason for that, if you think about it, is you got a small business is leasing space from a landlord. They want to improve it to how they want it to look. Landlord doesn't want to pay for it. So they're going to go to a bank and ask for a loan. But the bank looks at it and says, well, wait a minute, what's my collateral value on improvements to a property that my client doesn't even own? And of course, that means that they sense a collateral shortfall, so they reach out to the agent for their insurance policy. So your typical deals, $100,000 lines of credit, $50,000 working capital loans or inventory loans, a lot of vehicle loans as well, because we have lots of small businesses that just, they just want to buy a truck. They want to drive the truck, or they want to buy a second truck, or they're a contractor and they're putting on a new crew, and so they need a new van. So lots of those things go through SBA. That's where we get a lot of our sort of volume from. The microloan program is a lot the same, but it just tends to be smaller amounts, whether it's a little food truck or whether it's, building out a push cart or, a vehicle or just some inventory or some working capital.
Thank you, Raymond. And answer a couple quick questions here. Yes, this presentation will be available. You'll be getting an email over the next day that'll have the recording attached, and you can feel free to share that with any of your merchants in your downtowns that you would feel like sharing it with. The next question, Raymond, is who is the contact for the Southwest Ohio office?
Great question. That would be the Cincinnati branch. And boy, I can't remember the name of the fellow that works there, but I'm sure if you Googled the SBA Columbus District, that they would have a roster there that you could very easily figure out who's the manager in Cincy. They might even actually have somebody in Dayton as well. But check in with the SBA Columbus District for that, because they would know right off the top of their head who those folks are. I don't work in that office, so I know a few of the people, but not everybody.
Thanks, Raymond. The next question is I have a marketing company. I would like to put up a digital billboard on my property. Would this be eligible for an SBA loan? It is located on a state route near a busy intersection.
Yeah, probably. If that billboard is benefiting your business and you're a marketing company, I think that would make sense. What you can't do with an SBA loan is to like put up a cell tower or a billboard that you're leasing to somebody else. It has to be yours. It has to be your business to do it. So to me, that sounds okay.
So Raymond, what are you seeing kind of, as we're working our way out of COVID finally, what are people contacting the SBA for over the last few months?
Strangely, we've had a lot of people that are interested in starting businesses. I don't know if they just got used to, they haven't been back in the office for a couple of years and they're like, hey, I'm kind of sick of working for the man. I don't want to do that anymore. So I want to start my own business. So there's some of that. I think there's some interest in refinancings because people are sensing that their adjustable rate loans might be going up in cost pretty soon. And so there's some questions about, hey, can we refinance some of our debt that is going to get out of control based on the interest rate as soon as the next adjustment period goes around. What else? A lot of inquiries from people about how they are to deal with their economic injury disaster loans. Many of those are coming back into repayment soon. There were, I think, 40,000 or something, maybe more, SBA EIDL loans in our district alone. And all of those are going to start going back into repayment within the next several months. So people need to be aware that those loans need to be paid back, and they need to figure out how to pay them back. And there's a special pay.gov website that they're going to go to make those payments. And then there are still a few people that are having problems with PPP forgiveness. There's tens of thousands of those loans out there as well, particularly borrowers that got their funds from Cabbage or other online sources that are still having trouble getting their forgiveness on their PPP. So we got quite a few of those cases.
Great, thank you. Ray, I'm curious on the loans, particularly those that have been made through Huntington. Is there a resource to find out to what kind of businesses or what those loans are covering? Is that public record?
Yeah, I have a lot of that data. So if you're interested in particularly, what kinds of loans are done in a particular area or a particular district, or if one of your customers here or one of your members says, hey, tell me about what kind of SBA loans were done in my zip code. More than happy to share that information. I'd be a little reluctant to share specific information just about Huntington, but I guess I'd like to ask you a little bit more about why you're interested in that particular bank. But certain kinds of data I'm happy to provide without much undue bureaucracy. But if you could tell me a little bit more why you're particularly interested in a bank, maybe we could figure that out as well.
Sure. Yeah, you and I can do that offline.
Yep.
All righty. Let's see. I'm not seeing any more questions. You guys have a couple seconds left if you want to type any more in. But thank you once again, Raymond, for doing the webinar today. This was fantastic information for main streets across Ohio. And I'm not seeing any more, so thank you everyone for attending today. Our webinars are made in part through a grant through the Ohio Arts Council, so we're always appreciative of their amazing funding of the arts and humanities around Ohio. Our next webinar is on November 9th at 1 p.m. We'll see you all. Thanks again for attending today. Thank you again, Raymond.
You are quite welcome. Thank you.